Futures flat this morning ahead of the ISM's manufacturing index for April. China's official PMI rises to a 13-month high. Meanwhile, traders await earnings reports coming out later today from Pfizer and Sirius. I'm Brittany Umar, and the morning call starts right now.
Good morning, I'm Scott Redler, Chief Strategic Officer of T3Live.com.
And I'm Brittany Umar with The Street, and together we bring you the Morning Call Express. Stocks, of course, did slide yesterday. They posted their first monthly decline since November. Seem to be taking it somewhat in stride, though, Scott. So what do you make of the action that we've been seeing?
I think yesterday was somewhat constructive. We had 4 days off that double bottom low, and yesterday the market held in pretty well. The indices were somewhat flat to down a little bit. We held the upper 25% of that move. So at this particular point, with all the headlines that we've seen out of Europe, with Spain being downgraded, some of those countries going into a double dip recession, our equity markets are hanging in pretty tough.
And we're going to have some auto data points out later today. How much attention will be on them?
I think there'll be a little bit because we're looking for positive data out of the U.S. Last month, I think for GM, they were looking that for better numbers. This month, the Street's not expecting really anything. If you look real quickly at the chart of Ford, it looks pretty ugly to me. This is the last time we had those numbers coming out and have failed. So down here, near $11, it could be an opportunity. Same thing with General Motors. This was when they came out with their data last time and it failed. So right against 23, I think anything in line with a slight positive tone could be beneficial for both Ford and GM today. And
we have seen some recent strength out of commodities. You are long GLD. Could we see investor money continue to flow into gold as sort of the safe haven area?
I see two macro patterns here. One, long term we've been in a macro uptrend. Lately we've been in an intermediate downtrend, and we're coming close to breaking that. If you look here at GLD, if you look at the chart here, there are two patterns, okay? This is this inverse head and shoulders pattern we talked about. Here's your left shoulder, your head, your right shoulder, and look where we're knocking at the door of, this intermediate downtrend. So I'm long the GLD right around 160-ish. If we can get above this 162, I will add to it, and I think the next level of resistance will be 165, and that'll be very helpful or good for commodity bulls.
And what indicators are you looking at to sort of gauge the direction of gold?
Well, traders watch the euro, because if the euro goes up, dollar goes down, that's typically good for gold and commodities. If you look at the chart of the FXC, which is a way to watch it or even trade it, look at this series of lower highs. You have a high, lower high, and it's holding up there. If the euro or the FXC starts to break above 132 to the upside, that means the dollar goes to the downside, and that could help ignite GLD and gold above that 162 area.
Well, in April, we also saw some money flow into oil names. So what are some of your favorite stocks there?
I'm looking at Exxon, XOM. I like the chart. It's nice and tight above 88. It can continue. If you look real quickly here, you will see, it's near the highs, technically working out really well. Some guys are long, and I think traders will try and get some momentum above this 87.50 to 88. Nice pattern there. Also, Schlumberger, guys are watching. This too also has a nice chart pattern, a little bit different, not near the highs, but you have a downtrend that it's trying to break. It's been holding above. I think as long as it stays above 73, some traders will be buying some above 74 for an additional move. And if you look real quickly at the OAHs, nice series of higher lows. Here's the low that was put in October. Higher low, so it's working its way higher. So a little slow but methodical for investors.
We got to talk Apple giving back some of its post-earnings pop yesterday. The stock down over 3%. Is there opportunity for buyers at these levels?
Well, I actually tried buying yesterday, and it was a little bit painful. Stock's been a better sell than a buy since earnings. And if you look here, this is when earnings came out. It came right into resistance, right around this 620. It's been dribbling lower. You have the 50-day moving average right here. You have yesterday's pivot low of about, 584. So I'd like to see it hold the 50-day. I'm going to look to get long it. I'd like to see some type of reversal pattern where it opens below the 50, closes back above this pivot, and then perhaps we have a viable pivot that could be, a better moving situation, which will also help the markets.
All right, well, we're going to be diving into all of this and more in the long version, so stay with us.
Hi, I'm Sean Hendelman, CEO of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.